All right, you guys, good afternoon here. I just wanted to talk about kind of like the trading psychology here a little bit and you know, what's going through your heads when you see days like what we have had over the last few days. Um Recently, as you guys have all been aware, we have seen I'm not even going to say major sell-off, right? It's not even a major sell-off. We're correcting ourselves, guys, off these all-time highs. Think about it. Right, we had hit some lows very, very fast. Most equity stocks have hit their all-time lows, right? But we had this huge dip when COVID started, and literally, guys, we rallied all the way back up, retracing to the all-time high at that time, and then since breaking it. Uh so it's needed, guys. Like if you look at put a line on the chart. Okay, if you look at that, we literally have just corrected just barely below the all-time highs pre-COVID. So this is something that, when you're a spread trader, it's something that, yeah, it initially looks like it might hurt at first, but then things come around. Thursday, when we were looking at our plays, it was nothing but a sea of red and everything was red. Friday, it was about the same thing. There was no change. We had another red day and everything looked bad. But what did we do? We put on a lot of bullish plays, neutral plays, the beginning of the week, and then the end of the week came and we're red. A lot of them are red. A lot of our P&Ls were red. But here we are, Tuesday, another day, another day in. We have our third red day, right, on the S&Ps, and for that matter, almost just about everything, pulling back. And like I said, just barely to pre-COVID levels. We barely broke down. So think about it. If the correction's needed, all-time highs, if you didn't expect a pullback, something's wrong, even if you're a perma bear, right? I'm bullish, have always been bullish for as long as I've been trading, but even I expected a pullback. Just didn't know when. So yeah, it's going to come as a shocker, especially when you have a bullish portfolio like I may have. It's going to come and it's going to hurt, and you're going to have these days where you're like, oh crap, I'm a sucky trader. I need to close all my positions. These, you know what I mean? Like it's not. Hold on, guys. I'm gonna turn this down. Okay, it's not that bad. Yes, you look at your, and this is why I say, don't look at your P&L. Take the P&L off, right? Just completely don't look at this, right? Just don't even do it. If you're gonna sit here all day long, don't look at it. Put a piece of tape over your monitor, or just completely remove that column, right? Yes, it's good to know where your P&Ls are, but not at 9 a.m. and then 9:15 and then 9:30, and then all right, markets are moving up. It looks like we're going to be good, and then lunchtime rolls around, and now market's tanking and my P&L's going red again, and now I'm looking at all this stuff. Well, don't do that, guys. Right? If you're going to have anything, or you're going to look anything, look at your P&L day. Right? Thursday, Friday, for the most part, these were red. Okay. But because we are an option seller and more than half our portfolio is still out of the money, so those are going to decay, right? You're going to have a decay in option value even as the markets go down. There's still a little bit of decay. And as you notice now, right, we are on day 3 of being red. S&P's finished down 2 and almost 3/4, 2.7% today, right? Another red day. But I have a handful of total overall green positions on, and almost all these are bullish or neutral, right? And then I also have more than half of my portfolio is green on the day. Okay? That's not that bad at all. So, yes, we're red, right? Yes, it gets to you in your head. But guys, it's not something to worry about. There's a reason we sell 30 to 45 days out and not 1 week out, right? You're You're not going and selling this Friday's expiration. You're not selling next week's expiration, right? You're selling 30 to 45 days out, meaning at this time, that's middle of October. All right. So you're talking middle of October. That's about, way over here. So you can have another, and maybe even another day and come test this 200-day moving average by Friday, right? We'll even go into next week. We're going to come down and hit, say, the 200-day by next Friday or something, right? But then that still leaves 30 days for the markets to do this, right? So, yeah, day traders or maybe even short-term swing traders, they might be stopping out of plays, but because we have defined risks, undefined risks, diversification between commodities and metals and currency and equity, we are all over the place, which is good on that matter, so that when we have days like this, our whole portfolio just doesn't, explode and go crazy, right? So yes, it'll hurt our daily P&L. Yes, it'll hurt our overall P&L with it coming down. But with 38 days to go, 37 tomorrow, right? We can have 2 weeks, 14 days of red. And if the market turns around and rebounds and gets above that short strike, right? Remember that, above that short strike, you'll be 100% profitable. So we might see some red. Yeah, look at Tesla, Take-Two, Microsoft, Apple. All those are in the money right now. Okay, that's fully in the money. But I'm not worried about this. 38 days away. Yeah, Apple's selling off, technology selling off. We're seeing a little bit going off. But with 38 days to go, I'm okay with this. Now, if we got really, really deep in the money, we might have an issue. Okay. But with Apple, if it has another $5 down, $10 down over the next couple of days, it's going to come around. Just got to remember, it's only got to be really above that short strike on October 16th. So 38 days. Yes, we're not getting out of a lot of these plays in that 7-day average period, 7 to 10 day period. We might be in a lot of these all the way through, the next 30 days. Most of these ones are defined risk. So I will hold closer and closer to expiration. The naked plays I'll roll out. But so there's tons of time. So don't let it get in your head, guys, right? Don't let that red beat you up. Don't worry. There's absolutely nothing wrong with sitting on your hands for a week. Okay. Don't go put new trades on. We talked about it in chat today that, yeah, we could put some hedges on some of these vertical spreads that we have. But there's that skew. Okay. If you want to get 1/3 the width on a call side, you're going to have to get a lot closer to the money in order to get it. So, or you're just going to take a lot lower credit. And at that point, it puts you at a lot higher risk for that play. You only get $1, you're risking 400 versus, just trying to get that 1/3 the width. So rather than going crazy and either selling plays off and freaking out and then jumping into call spreads, and then all of a sudden the market turns around in 2 weeks, hang on, ride it out. If you want to put a hedge on, that's great. Go a little further out of the money just in case it turns around. But don't let it beat you up, guys, right? This is what we do. We hold through. We let the probabilities play out. You got to remember, most of these plays had a 70% plus probability of making half that credit, half that profit before the expiration. So we let the probabilities work out. Let them turn around. Let the market correct itself. Okay, we're not going to see March, right? Absolutely not going to happen. All right, that was unexpected. Everything else is kind of, ready to go. Market's just correcting itself. So just remember that market correction, it's needed. Everything was literally at all-time highs. All right, so it's going to do a healthy pullback so that we can stair step back up. We might be choppy for a few weeks, so we're gonna have some double-sided action. That's going to be great, but we're not going to see those lows that we saw in March. We're not going to freak out about those things. We're just going to trade easier, right? We were going crazy. We were putting 6 trades on a day. Now we put 1 on today. We put Nvidia on today, and we traded SPX, but that was a 0 DTE play, right? So we might have that 10 watch list, and normally we got them all put on by Monday, maybe Tuesday. We might not get all these trades put on because we're watching the market. We're not over trading. It's uncertainty. We're still going to trade. We're just going to trade lighter until we see what's going on. So just remember that, guys, okay? That don't freak out when you're trading spreads. Don't watch your P&Ls. Keep an eye on maybe the daily. Just at the end of the day, see where your plays are at. But don't let it be like, I got to liquidate my account. Okay. Don't do that, right? You would hate yourself if you liquidated everything that's in red and then 2.5 weeks from now, we're all closing them for profits, right? And you'd be like, oh, why did I do that? The market turned around. You gotta do it, okay? Your defined risk plays usually are your stop loss. So why stop out early when that's you're risking two to make one? So and think about it. When I do naked plays, my stop is like 2 times the credit received. So that defined risk play, you're already at your stop loss. So why freak out and sell, close that play out when let it roll, let us do a thing. And you might very well see profit on 90% of these, or we might very well close every single one of them for a loss. Nobody knows, right? We don't know, but we play it out. We let it go. We don't freak out and we move on and we keep trading, right? A little bit smaller, maybe a little less often, 1 trade a day, 2 trades a day. And then when the market gets going again, we get going, right? As these come off, we'll put new trades on, maybe a little bit neutral. Maybe we'll skew them one direction or the other. But okay, I wanted to get this out and have everybody. I know I'm rambling and saying the same things over again, but I can't say it enough. That do not freak out about what your portfolio looks like when you are a spread trader. Okay, if you know what I mean, like they're gonna be red. But as you can see, like I said, the market's down 2.7% today, and 2/3 of my portfolio was green on the day. Not the overall, right? We're not looking overall, but just about every single one of my trades, right? 2/3 of them are green on the day, even though they're all red, and most of them are either a neutral or a bullish play. So that shows you theta works, time decay works, and it will work out. Okay, guys? So on that note, I'm going to go ahead and jump out of here, and I'll see you guys in chat. Take care. Have a great evening.